All right, so Home at Home Group Inc. It's been around for 41 years. Retailer out of Plano, Texas. We got a couple hundred stores, 50,000 unique items. Did 1.17 billion or so this past year. Their CEO was on the board for many years, um, and he's got a lot of operational experience. Worked, at high level positions at Nike, Old Navy, etc. I mean, he's the Gap, etc. So um, I want to give you guys a crack at this trade, at my analysis on this as a trade. I think that we bottomed here at about $5. You can see even this daily chart. We went below $5, but when we snapped up, we closed at the top of this green bar here. So we closed, at 550. So we haven't had a daily close in a long, long time below $5. So I think this is a general base here. The red ADX lines. Obviously, every trader has different things that they look at, different analyses. And out of the years that I've been working on this stuff, this is the analysis that I use. So the ADX line. So when we're pinching down, see we're pinching down here, and the price collapsed. It just dropped substantially. But now that we're pinching down here, the price is not pulling down very low. Even here, it pinched down. It didn't even go low that much. It snapped down and snapped back up. Right? Same thing here. Snap down a little bit, snap back up. So I think the bulls are sort of trying to stay strong here, and I think the bears, to get it below $5 is becoming pretty challenging to them. And also looking at the RSI, we're strengthening here. MACD, we're strengthening here. The orange is above the purple. And I also like the Arun up down. It's a relatively new indicator that I've used, and I just like it. So the blue line, the Arun up line, if it spends a lot of time down at the zero line, that's very, very good, especially with this conflation of these other indicators. And as you can see, when the blue line goes up, the price generally rallies. So right here, we were way, way down here, and it snapped back up. So, I mean, there were obviously other pieces of info that would suggest a rally. But what was interesting, it would have been super tough for me to even want to get long there. In fact, I would not have gotten long there. It was interesting too because, just as an aside, as this price is going up, what's the MACD doing? It's going down. It's going down. That's very bearish. So it wasn't. So even though it was going up, it's like, hey, enjoy this while you can, because I'm not gonna play out. And it's been sort of bouncing around, and it actually fell from 650 all the way down to that 5 range. So I mean, the bulls were not in charge there. But right now, just looking at the fact that the Arun up down has spent a lot of time at the zero line this past year, and we're looking at even here. Yeah, so the fact that I like the fact that we're down. If we were up, if the blue line was way, way up, I wouldn't want to get long here. I'm sorry, there are thousands of stocks. I'll pick a different stock. So I like that a lot. So let's look at the weekly chart. This is a relatively straightforward pattern, technically. We had a double top here. Price dropped. I don't know if we were on divergence or not. We're not looking at that trade. Another double top here. I mean, we had a lot of stuff, but now we've got a double bottom here. So this double bottom at $5, pretty solid. Let's see what the deal is. See, the last time we have the double top, we have these ADX red lines pinching down. The price dropped huge, like boom, big, big drop. But then now we have the double pinch down here, and the price only dropped $5 or $6 in that range. So it's not. So I think it's finding a bottom. I think 5 is the bottom here. And look, the RSI strengthening, MACD strengthening, and again here they are Arun up line. It spent a lot of time down there. I don't like the fact that it's up. I'm not a huge fan of this, but I like all the other evidence. And ideally, I would like to, have gotten in here, which is probably when it was at 5. Actually, no, it wasn't. It's interesting. So this thing came up. And the price came down. So it doesn't. Oh, the Arun up down line is not exact, but I like a general look. I like a general look, and so for right here, it was way up the whole time. This is coming down. I'm guessing that the price is either getting higher, the tops are getting higher, or it's flat. The tops are flat. Look, these tops are coming down, and that's what happened. This was getting higher. These tops are getting higher on the weekly. ADX, the red line, are pulling down. They're pinching down. Divergence, bearish divergence. No divergence on the, slight divergence on the RSI. Slight divergence on the MACD. This is beautiful. Our run up down is up, and then divergence on the bearish divergence on the CCI. Beautiful short, and then boom, $40, and it just collapsed. Woo! And what an amazing short here. That's why I love the technicals. I love this analysis. But now we've spent a lot of time down here. So, could the price drop a little bit? Yeah, of course. I think it's possible the price drops down to $5. Maybe it doesn't. Maybe this is it. Maybe this is the rally. Maybe it bounces around for a while, for the next 6 weeks, 8 weeks, 10 weeks. Who knows? There's anything can happen, obviously, right? But I think by and large, I've got a regular stop, and then I've got an end of period stop. So your regular stop is going to be below your end of period stop, and then your end of period stop is crucial, because then if something shakes out, but it doesn't hit your regular stop, then as long as it closes above the end of period stop, then you stay in. And we'll talk about this more in subsequent videos. But yeah, I really like this share price. I like the share price as far as a buy. There are some folks online that talk fundamentally. I have other videos where I talk fundamentally, but I 80% technical, 20% fundamental. But there's a lot of arguments for different reasons. People say, oh, the industry's dying. People are all online now, Amazon, all the obvious stuff that you've heard ad nauseum. However, that doesn't mean that there isn't some strength here. That doesn't mean that these guys, aren't savvy in terms of, acquisitions, online acquisitions of some e-commerce brands. I mean, or they're strictly focused on, revitalizing the shopping space. I mean, it's real easy to just look at an industry and say, oh, well, this industry's dead, this is crap. When you look at technicals and fundamentals, you want to keep in mind that a lot of the news has already been priced into the price. So we've already dropped from 40 down to 5. I mean, if you want to call it a dead cat bounce, call it a dead cat bounce. But I would not call this a dead cat. I mean, this is a $1.17 billion company. I mean, it doesn't mean that it, can't struggle in the future like JCPenney, etc. But I really believe that it's a misnomer to not touch stocks in quote unquote dead industries just because you've read some headlines. So I'm a huge fan of this trade. I think that if I was to play it relatively moderate in terms of my price targets, I would say, okay, well, what was the last drop? Well, this was this double top here at 25. We dropped down to 5. That's a $20 move. A 50% rally from $5 puts us at $15. So I think from $6 to $15 is 150% return, pretty phenomenal. But even if you wanted to play a little bit more moderate in terms of your risk reward, in terms of your target, you could play it right around $10, which is still a 67% return at $6. So, anyways, you guys, I like home. I'm gonna buy some tomorrow morning when the market opens, and I think that the next 4 to 10 weeks are going to be very, very bullish. Thank you very much.